Hey guys, Don Durrett, Gold Stock Data. I was at the VRIC this week and I did a panel and I listed my top 15 must-own gold stocks. And I thought I would do a video. I think it's probably going to be, it was recorded, it might be released, but I decided I was going to do a follow-up video. And in addition to those 15, I added six more. So I have 21. I wouldn't call these uh, 21 must own. I'm going to go down the list because there's some that have high risk, but I was going to do 20, but I added another one, made it 21. So these are kind of 21 of my favorite risk reward silver plays. I guess we could do it that way. Um, and so I'll mention kind of where they rank as I go down the list. We're going to do them in alphabetical order, but I'll tell you kind of where they rank as I go down the list. The first one is Adriatic. I wouldn't put Adriatic in my top 15 because of the location, and they're currently just ramping up production in Eastern Europe. I've had really bad luck in Eastern Europe, but and the reason why is there's just a lot of environmental resistance there. Um, and so, and and that kind of worries me. But there's a lot of positive with Adriatic as well. I mean, it's a big mine, a lot of free cash flow. Everything in green here is top 25. Four is a 10 plus bagger. Three is a very good risk reward. Three five is about as four is about as good as you can get. Three five is excellent risk reward. And B, so they're not a B plus, but they are a 4.3, which is good. 4.3 B. We really want this to go up to B plus, maybe A minus, um, but but definitely B plus in the near term. We want them to start. They're ramping up right now. We want them to hit their target. So there's some risk with Adriatic, but the thing we like about it is it's a long life mine with excellent costs. They should generate a bunch of free cash flow. So, it definitely makes I'm gonna say my top 20 list. Aftermath. Um, this one is not a top 15 either. And they're treating this more, their Beringala mine, they're treating this more as a manganese mine. And so they're probably only, Beringala has about 100 and I think 30 million, 125 to 135 million ounces of silver, which is a lot of silver. So they could mine 5, 6 million ounces a year of silver. And using the manganese, the cash cost would be negative. So they could actually call this a low cost silver mine, but they're not going to. They want to call it a manganese mine because the manganese has more revenue than silver today, and that's kind of how these companies operate. Um, they're very conservative. They all go by the book. They don't, and if they were really aggressive, they would realize the future. They'd realize that this is going to be a very valuable silver mine, but that's not what they're going to do. So what they're going to end up doing is mining less silver than we want them to do initially, but I think they'll pivot at a certain point. I think they'll pivot to more silver production. So um, so there's that manganese component there, but they do have a lot of silver. I have it as a B plus because I just think that at a certain point it's going to turn into a low cost silver mine. Avino, um, this one is definitely in my top 15. I think this is probably the most undervalued silver play going, and the reason why it's so undervalued is because they have a market cap of 170 million, but they have enough silver in the ground, 370 million ounces of silver equivalent, to get to 8 million ounce producers. So if they're an 8 million ounce producer, kind of the sky's the limit here on their valuation. But it's going to take them probably 4 years to expand production to 8 million ounces. They're going to get you about 3.5 this year. Um, and So it's kind of a steady growth story, but nobody is they're vulnerable to getting taken out because 80% of their shares are owned by retail. There's they don't have any strong insiders to prevent a hostile takeover, but nobody will do a hostile takeover at $30 silver, but at $35 silver, I think somebody would, because if you can get 350 million ounces of silver for say $200 million, so that's 10 17, about a fit, maybe more than that, about probably 250 million ounces. 250 million ounces, I mean, $250 million, excuse me, is about probably what they'd have to go for. So you get, they're paying, somebody would pay less than $1 an ounce in the ground. I think that's a steal. So I think they're the most vulnerable company for a takeover. Aya, definitely in the top 15. They're actually a Mormon. They're in the top eight. Aya, their Boumadine project is bigger than Zagounder, which is amazing because Zagounder is a very big mine. This is going to be, I think they get to about 8 million ounces this year. This is definitely going to be a 15 million plus producer in a couple years. I think they're going to get to 20. So you're paying $1 billion for uh, currently for 8 million ounce producer, it's very cheap. So I don't have them as a 10 bagger. I don't even have them as a 3.5, but they probably will um, pretty soon, I would think. But I do have them in A minus. I do have them rated the quality pretty high. I only have them as moderate risk. So, and the reason why is because they generate a lot of free cash flow. I like the location. But the Zagounder and the Boumadine, those two mines are just outstanding. Zagounder is basically a pure silver miner. Boumadine isn't. It's more. It does have a lot of silver, but it also has it's more polymetallic. It has some gold, zinc, and lead, I believe. Um, but Boumadine is just it's getting massive. It's growing very quickly. Core, absolutely. I don't really need to tell you the story too much. It's definitely one of the top eight, one of the Mormon stocks. I have it at A, as high as you go. This is the highest rating you could have. I actually have Core ranked number one. I moved it ahead of Hecla, and the reason why is because of the acquisition of Silvercrest really consolidated them as far as free cash flow. They're generating a lot more free cash flow right now than Hecla is. So I had to respect that and move them to ranked number one. Discovery Silver in Mexico. This is probably my favorite development play, and the reason why is because of the size. You're paying 269 million for 32 million ounces in production. So they're going to start producing, I believe, 23 million ounces. That's phase one. And then in year 3 or 4, they jumped to 32 million. So you're paying 270 for 32 million ounces. That's just silly cheap. Of course, they're going to get dilution when they have to pay to pay, to pay for the capex. But even with that dilution, it's still silly cheap. And then that 32 million ounces of production that they're going to begin mining in, I think it's year 3. Um, it's going to grow. That only includes half of the deposit. I think this is going to be a 40 million ounce mine, which is kind of crazy big. So some people are nervous about Mexico open pit permits. I'm not. I'm bullish. I don't think that's going to be an issue. Endeavor Silver, I have them in the top eight in Mormon. I think I have them ranked fifth um, behind First Majestic. And so Endeavor, they're right now they're ramping up. No, they haven't started production. So Terranera is going to begin production this year, and then that's going to lower their cost significantly. And then they've already started working on, um, I think it's Pitarilla. So the Pitarilla mine, they're already started working on that, and that's going to give them a lot more production. So Endeavor, yeah, I actually like the risk reward better for Endeavor than I do for First Majestic, but First Majestic is a bigger name, and so First Majestic is going to get more of the New York, the Wall Street money. So I do think Endeavor will outperform First Majestic, and I actually like it better as a risk reward. But I have First Majestic ranked ahead of them fourth, Endeavor fifth. The reason why is just that Wall Street money. I just think when silver starts running above 36, First Majestic, Pan American, Hecla, and Coeur are all just going to get a boatload of money. And that means that their multiples are going to blow out. Okay, so First Majestic, they I talked to them at VRIC. I was hopeful that they would begin more aggressively developing Jarrett Canyon in Nevada, but they haven't made that decision yet. They haven't sped up their development plans. It looks like 2027 for Jarrett Canyon. So we're gonna have to wait, 2 years for their production for us to get some insight. So basically they're going to be stuck at 30 to 32 million ounces of production, which isn't bad. That's going to generate a lot of free cash flow. But we want big alpha, we want a big return, and Jarrett Canyon is that ticket for us, right? So it's going to take their production to 37, 38 million, maybe 39. So let's call it 37 to 39 production silver equivalent when Jarrett Canyon starts up. And that I think that takes them to $50 a share with Jarrett Canyon at say 80, 90, $100 silver, somewhere in there. But um, the key for them is their cost. We don't want their cost to keep going up in Mexico, too much. They have to contain their cost in Mexico, um, hit their production number 30 to 32, and then get Jarrett Canyon up and running. And then First Majestic should be a nice player. Fresnillo, I have them ranked right behind First Majestic sixth. Um, and I really like Fresnillo's upside potential, especially for the size. I mean, it's a $6 billion market cap, but yet they produce. I think they're maybe not number one silver producer in the world, but if not first, they're right there at the top. They produce over 50 million ounces of silver a year. So, and they're not, and they're right now they're very cheap. So my point is, all of that silver production is going to generate a lot of free cash flow. And Fresnillo, um, it's kind of crazy. When the upside's a four, they print as a 10 bagger. By the way, First Majestic, I have them as a four, but they're barely a four, whereas Endeavor is a solid four, and so is Discovery, so is Coeur. First Majestic, they're currently priced about six, so six times 10, I mean, that's $60. So I don't think they're going to get there. It's actually to be a 10 bagger, I'd have to get to $70. So I think this should be a 3.5. I'm gonna change that after this video. I think they're more of First Majestic is more of an 8 bagger. But First Majestic, oddly, Fresnillo is a solid 10 bagger. That's how cheap they are right now. Go Gold. So Go Gold is not, it's in the top 15, but it's not in the top 10. And Go Gold is, they have the Los Ricos project. So with Los Ricos, it's currently a B plus because they have to build both mines. Los Ricos South is going to get built first. I think they're going to start construction this year on Los Ricos South. And then once it's up and running, they'll build Los Ricos North. They're going to be a 15 million ounce silver equivalent producer, probably 18. So they're very similar story to Aya. Both of them basically have about, low cash cost, a lot of free cash flow. Um, I think Gogol might get taken out, whereas Aya, I think Aya would be able to protect itself. I think Aya has enough insiders. I don't think Gogol GoGold might. So we have 25% Go Gold insiders, and I have Aya at 50. So I don't think anybody's going to take out Aya, but Go Gold I think is a little vulnerable. Um, I don't think they're going to take it out. I don't think Discovery will get taken out at 35. Um, but Go Gold I think is vulnerable to get taken out. Uh, we also you have to wait for them to build both of their mines, but I really like owning a stock. I mean, $300 million market cap for a 15 million ounce producer is really cheap, and they're not going to dilute very much to build these mines. Both of their mines, Los Ricos South and North, are not high capex mines. They're both about $200 million. I think they'll be able to build Los Ricos North with a lot of the cash flow from Los Ricos South. So they already have a bunch. They're sitting on a bunch of cash right now. Yeah, it's amazing how um, we have this low silver price, but these silver companies are in just fantastic shape, really. I mean, if you look at where they're at now we get to um, a high risk company that isn't in great shape. Guanajuato Silver, some people call it G Silver. Um, it has an $85 million market cap and they're producing about 4 million ounces. So they're highly undervalued. But the reason why they're highly undervalued is because they have high cost. I have, it's an easy four bagger, but we might get diluted. This probably should be a B minus. I'm being nice here, giving them a B. And the reason why I say it should be a B minus is because their costs are too high. I would say their break even cost is about 28. And so at $30 silver, it might even be 30. They might even lose money this quarter, but but at $2, that's not very much. They're making about 8 million in free cash flow. Um, so that would be 2 million a quarter. So we'll see what this quarter is. I don't think they'll make much more than, they haven't even told us about last quarter. So last quarter, I wouldn't be surprised if they lost money. And they don't have a good balance sheet, so we might get diluted. That's the risk with Guanajuato, is that they're going to dilute us some more. And they have 664 million shares outstanding, so we don't want to be diluted any more. We don't want them to do a reverse split on us. Those tend to not work out well. Uh, Guanajuato, they're going to get healthy about $35 silver. So if you get to 35, that's about 40 million in free cash flow, which is enough. So that's where we need them to get to 30. We need silver to get above 35, 35 or higher. 34, 34, I think is enough, make us comfortable, if you will. But 33 or lower, we don't really want to see that number for them. They're just, spinning their wheels, if you will. Hecla, have them ranked second. They're not a four. They're actually, last time I looked, I think they printed like a 9 bag was amazing because they've dropped down in price, but they're at 546 right now. So I think they're more like an 8 bagger, but by and large, Hecla, yeah, ranked second. The reason why I have Hecla ranked second is because the location of their mines. Um, Wall Street, the go-to stocks, I mentioned that before, Hecla, Coeur, First Majestic, and Pan American. That's what Wall Street's going to buy. Um, and so if you get a big move into the miners, Hecla is going to get bought, and its multiple is going to take off. They're just going to what I call participate. They're going to participate in a big way with the silver move, and that's what you want to do. You want to own these participators. I think well, maybe not all the Mormons are going to participate, but I definitely think that the top four I mentioned, and then I think Endeavor will definitely, and then Fresnillo, I think will participate, and then another one that I think is going to participate in a big way is Hochschild. Hochschild they had a bad financial report this week, and they dropped 15%. I just see it as a total opportunity. They might even have dropped to possibly 10 bagger. They might be. Um, I wanted to stay on this page, but I want to go and see. We're going to go and check Hochschild and check and see because they went down. We're going to see if it jumps to a 10 bagger. Oh my goodness. Look at this. It dropped in price. They're currently printing their current multiples of 5. So what does that mean? That means their free cash flow right now is 235. If you multiply that by 5, that's their market cap. And they're printing as a 14 bagger. Oh my goodness gracious. Can you believe it? That is one cheap stock. So they're going to a 4 and uh, who was it? First Majex is going to a 3.5, but Hochschild, I'm, count me in as a big fan. I love that leverage. I mean, a 13 bagger. Are you kidding me? Um, Impact Silver. By the way, Hochschild is ranked 6th, right after Fresnillo. Impact Silver, they they are not in the top 15. Did I mention them at Rick? No, I can't remember. um, no, they're not, but they're right there on the edge. They're close. They're they're not in the top 15, but they're close, definitely in the top 20. Now, I don't notice that it's not blue or green. So green is top 25, and then blue is a top pick, and then black is not a top pick. So I only have them as a 2.5 because they have high cost. As a matter of fact, their ASIC right now is kind of through the roof. I think their ASIC is 28. So they're losing money right now. Their break even is about 31. So they're going to lose a little bit of money, but they have a good balance sheet, so they'll be able to survive. And the thing I like about Impact is that when silver prices go up and they have cash, if they have cash, they can use it. They have a lot of drill targets. They probably have 100 drill targets, but they just don't like to spend money. They're not an aggressive company, so they're kind of taking their time. Plus, this Plomosas project, it's a high grade zinc project. It also has gold and silver on the property, and they found some really, really good gold trenches that they're drilling. I talked to them at Brick. I was very impressed. I liked the company before Brick, but I was very impressed with what they told me about the drill potential, the exploration potential, both. I think it's called Zacapan is their silver property, 50,000 acres, and then the Plomosa project, which is also a big property. The drill targets that they have on both properties is outstanding for their valuation. They're valued at $50 million. So I like the risk reward of Impact. It's really one of the few small producers, the only small producer on this list, one of the few small producers that I have a lot of, but I don't have it as a top pick. And the reason why is because they're losing money right now. I need them to start generating some free cash flow. Then this thing will likely jump from 4 to 3, turn green, and go to B plus once you get to say above $35 silver. As an investor, that's what you want to look for. You want to look for, kind of these things, these turnaround stories that, are ready to turn, if you will, with a ton of leverage. Pan American, I was thinking about my ranking. Actually, I think I have Pan American ranked 5th. Yeah, I have them 5th, Fresnillo 6th, Hochschild 7th, and then Aya 8th. So Pan American is ranked 5th. But the reason why they're 5th is because they're 3.5. You don't have the big upside. But I looked at them recently. We can take another look, and they printed as like a 9-bagger, which kind of blew my mind. A company of their size. I mean, $8 million market cap. If we come down here and we look at their upside, it's printing as almost a 9-bagger, and their current multiple is as a 9. This is the same as Newmont. Newmont and Barrick are both at 9s. I think these companies, these elite companies, if you will, should at least all be at a 12 or a 15. But right now the market's in the dumper and nobody's giving them any value. But look at how much free cash flow these guys are generating, almost $1 billion in free cash flow. And yet it still prints as a nine bagger. This is at $4,000 gold. So, and they're producing 900,000, almost a million ounces of gold plus 22 million ounces of silver. And I'm only adding another 13 million ounces of silver. So basically, I'm expecting the mine in Guatemala to come back online. So if it doesn't come online, we won't get the nine bagger. So the nine bagger is based on the expectation. So they've been working on getting that mine restarted in Guatemala, Escobal, I believe it is, for they've been working on it for 5 years, but they're getting closer, I believe. I think it's about 2 years out. Once they get the green light, I think it'll only take them about 6 months to restart that thing. And they're just working on permits, but you're talking about a lot of money, a lot of taxation for the Guatemalan government. So they're working on getting that thing restarted. I think it's going to happen. You're talking, oh, you can imagine it's a very big mine, like 20 million ounces a year. You're talking, I don't know, 1,500 jobs, something like that in Guatemala. That's huge for this. So the government's going to try and get that thing restarted. Um, Santa Cruz Silver. This one is a kind of a high risk. That's why it's 2.5. But I moved it to a B from a B minus because my because their debt is now, I believe, under control, and the debt was the big issue with them. Now, this is a polymetallic mine with only about 25% of the revenue in silver. There's a lot of zinc and lead. But if you only count the silver, you're looking at about a 5 million ounce producer. And so you have a 5 million ounce producer, and they're currently at $86 million. Well, if in 5 million ounces of silver, I think that's $1 billion company. So that's why it's printed as a 10. So I think I like Santa Cruz. I like the alpha on it. Silver Storm, Silver Storm, they have the La Parrilla mine that they bought from First Majestic, and they're going to get that thing restarted this year. They've been drilling it. It doesn't have a lot of silver equivalent, about 25 million ounces, I believe, today. With drilling, I think it's going to grow to at least 30. And I think when First Majestic sold it to them, they said it definitely has 50. They just have to drill it. So we're looking at a 30 to 50 million ounce deposit. And First Majestic was producing 3 million ounces a year. So it's basically a 3 million ounce a year mine. And so if we just look at it, it's 2.5. 2.5 times 10 is 25 million ounces. 25 million ounces is basically a 10-year mine life. So if they can get a 10-year mine life out of it, that alone is worth, I don't know, 300 million, let's say. So they're currently at 32. It's like a 10 bagger just for La Parrilla. Well, guess what we get for free is their San Diego project. Their San Diego project has 220 million ounces of silver equivalent at 110 grams. Now it's low grade, but at $50 silver, it's economic. And they think it has another 100 million ounces. So if we call it 300 million ounces, even if they had 60% recovery, you're looking at like 200 million ounces. And at 200 million ounces, you're looking at about 8 million ounces a year production. So if you combine them together, it's 10 million ounces a year. So if they turn into a 10 million ounce producer, it's currently valued at 32 million. Yeah, do the math. This thing is probably cheaper than Avino but Avino's a producer. But if you look at developers, Silver Storm and Discovery are both kind of crazy cheap. So Silver Storm definitely has to make this list. The one risk that we have with Silver Storm is the management team. They're a bit green behind the ears. They're not, I wouldn't call them elite. So we're betting that they can handle this. They can pull it off. So, that's the one thing, one of the risks. But it the risk reward looks good, I think. It works for me. I have it a B minus because they haven't restarted the mine yet, and sometimes you have problems on the restart of the mine. Plus, San Diego, we don't know how long it's going to take for them to build that thing. I mean, if we have to wait till 2030 to get into production, that's not good. So we don't even have a PEA yet on San Diego. So that's another reason why it's B. But it's a long-term bet. I think Silver Storm works. Silver Tiger. This is probably one of the better risk reward development plays. I have it as a B plus. 74 million market cap. They're going to mine 4 to 4.5 million ounces of gold and silver. It's actually an open pit. It's actually more gold than silver, but they're calling it silver equivalent because the underground is silver, high grade silver underground. So they're going to build this pit first. They're working on the permits now. Once they get the permits, hoping to start construction this year if they get permitted. Then they just did a PFS on it. It's the market, it's like $80 million low capex to mine 4 million ounces. I mean, it's kind of, you don't see today, you don't see very many first time mines get built for less than $100 million. So the economics absolutely work. And then once they get to that second mine, that underground silver mine, they're basically going to double production, get to 10 million ounces silver equivalent. And I think it's going to grow from there. But as a 10 million ounce producer, I mean, you're looking at $2 billion and it's currently at 74. So 10 bagger all day long. So love the leverage on that one. SilverX, this one probably has the most risk of any stock on this list. The reason why I put it on here is because the size of their deposit and the potential for this thing to get to 4 million ounce producer and potentially higher than that. So, but right now, I think they're break even. It's like Guanajuato, it's probably around 28, might be 30. When they do their financials, they might lose money. Just like Guanajuato, they might dilute us. So they're only at 35 million. If we go look at it, I can show you you can see I have their cash at $1 million. So they probably are going to need to dilute. They're going to dilute us. But if we look at their resources, I have them at 155 million ounces. That's a lot of silver equivalent. So they could easily get to 4. I think now they're currently mining about 1. So they're producing about 1 today, which is nothing. I am at $29. So, but it might be 30. So they might be losing money. But at 155 million, these guys could easily get to 4. So if I get them to 4, these costs probably are a little low. I have them at 32. So, but they print out as a 38 bagger if they don't dilute us. But even if they dilute us, we still could end up getting a 10 bagger out of this. But they're going to have to dilute for the capex. So there's a ton of risk with this stock, but uh, I put it on here because I do like the CEO, Jose, and I think he's going to be able to pull this off. He's a mining engineer, and he's doing everything he can, but it's not easy. Small silver miners, Guanajuato and SilverX, it's tough right now at $30 silver for them to make any money. So they're just struggling. But you get to 35, 36, $37 silver, and these companies they can start expanding production. Let's just put it that way. Silvercorp, they're a top 15 company, not in the top 10. Uh, I like the fact that these guys have diversified out of silver and into gold because they were basically a kind of a pure silver miner in China. And now they're in Ecuador building 2 mines. The first one's going to be a copper gold mine. The second one's going to be a really large, low grade gold mine. After they get both of those built, they're going to be generating a lot of free cash flow. So I have them as a 3 here, but I have them as an A minus because they're generating a lot of free cash flow. But if we look at it, I think it's higher than a 3. Yeah, it's printing as an 11 bagger here. Their multiples an 8. They're generating 68 million in free cash flow, and they have a good balance sheet. So I'm not even valuing them in the future with any gold production, only 8 million ounces of silver, but we know they're going to be producing gold with their project in Ecuador. So this thing is a lot cheaper than 11. They're expanding production in China right now to 8. So this should be, they're building those two mines down there in Ecuador. So I'm not sure why took this off here. I think it's because they had an environmental issue and I haven't added it back. So that's a lot of free cash flow, 200,000 ounces of gold. So Silvercorp has a ton of leverage, as you can see, because I'm not including their future gold production. And then the last one is Southern Silver, and this is just um, a pure optionality play. I think it's the only optionality on this list. Yeah, it is. All the other we're really chasing free cash flow and all the others. This is the only exploration play on the list, and they're valued at 46 million, and they have 250 million ounces, so that's 50 cents in the ground. Uh, so we're hoping that this one. I almost left this one off the list, but if I left it off the list, I knew you guys were going to say, "What about them? What about them?" Because people really like Southern Silver because it's fairly cheap at 46 million. Um, so if we go and we look at it, but this one is just we just don't want them to give this away. So 300 million ounces. So if they sell it at a dollar an ounce, that's 300 million. If they sell it at $2 an ounce, it's 600 million. They're currently at 46. So we're hoping they sell it for at least a dollar. So if they sell it for a dollar an ounce, we get looks like about a 5-bagger. But they're going to do some dilution between now and then. So call it a 4-bagger at a dollar an ounce. Um, and then we don't know if they're going to be able to sell at that grade, 300 million at 275 AGEQ. They should be able to sell it for a dollar an ounce, and $2 an ounce just for the silver. So the whole thing about Southern Silver, it really comes down to, do they sell it early? Are they patient and they wait? Because I really don't want them to sell for less than 300 million, but I'm probably not. I wouldn't be surprised they sell for 150, 200 million. If they sell it for 200 million, I won't be happy. I will feel like they sold too early, too cheap. So yeah, that's the bet. So you just have to say, do you think that are they going to wait? How long are these guys going to wait? Price are they going to get? It's not a fantastic. The thing about these optionality plays is they're not fantastic risk reward unless you have confidence that they're not going to sell early. Like I'm pretty confident first Free Gold Ventures is not going to sell early, and I don't think Banyan will sell early too. They're both trading. Free Gold Ventures is $10 an ounce, and Banyan's $6 an ounce. So those look better to me than Southern Silver. But I put it on this list because I knew you guys would mention it. Now the question is, okay, these are my kind of top 21. Now you can tell me which ones you think deserve to be on this list. One would be, I think, Chesapeake, but Chesapeake is more of a gold producer than a silver, but they have a lot of silver. Um, Thinking off the top of my head, which ones you guys are going to probably throw at me. Nothing's really coming to mind right now. It's you know super juicy 5-bagger. I mean, that's what we're looking at here. We're looking at super juicy 5-baggers. So if you have any other silver plays that you think are super juicy 5-baggers, then you can let me know. All right, so I think that's it. We'll just call it a video.